This is Matthew Kratter's Bitcoin University. Today I want to talk about something that I've been alluding to for the past few days, and that is the new Bitcoin dollar system. And this is quite bad news when you begin to put the pieces together, which I'm slowly doing thanks to Mark Goodwin and Whitney Webb, which we're going to be talking about. Now, as we've talked about many times on this channel, the US dollar has not been backed by gold since 1971. So the US government had this problem: how to create artificial international demand for these green pieces of paper, and by extension, US federal government debt, US Treasuries, when they were no longer backed by physical gold. So there are a couple of different systems that were used to artificially prop up international demand for the US dollar. The first one we've talked about many times on this channel, the petrodollar system, which began in the early 1970s when the US coordinated with Saudi Arabia to force people to have to buy US dollars first if they wanted to buy crude oil, because the Saudis agreed to only sell their oil for US dollars, and by extension the rest of OPEC slowly moved in this direction. The other part of the petrodollar system, of course, was killing people like Saddam Hussein and Gaddafi, who tried to sell their oil for euros instead of US dollars. This was behind the Gaddafi assassination as well as the Iraq war that won in the early 2000s. The other part of the petrodollar system, the Saudis agree to recycle their oil profits into US Treasuries. So they take their earnings and they buy US Treasuries with it. So this petrodollar system created demand for the US dollar as a medium of exchange to buy crude oil and other commodities. This petrodollar system also created demand for US Treasuries as a global reserve asset, a store of value, albeit a poor one, but one that was used by all the central banks around the world and nation states. So how else do you create global demand for these green pieces of paper and this toxic sludge known as US government debt? The other method was developed in the early 2000s when China was admitted to the World Trade Organization in 2001. This is trade surplus recycling, and it was going on a little bit before with Japan, but it really took off when China joined the WTO in 2001. So how does trade surplus recycling work? Well, China, Japan, Germany, other trade partners with the US, they sell us more stuff than we buy from them, because not a lot of manufacturing is still done in the US because it's a global reserve currency and the dollar's just too strong. And so we buy a lot from abroad. And then what these countries do is they take their trade surpluses and use them to buy US Treasuries, thus helping to keep U.S. interest rates lower than they would otherwise be. As the price of treasuries goes up, the yields go down, the interest rates go down, and the U.S. consumer is thus primed by low interest rates, low credit card rates, etc., low mortgage rates, to buy even more stuff from China and elsewhere. So you really need to find a place to place this government debt. Like the petrodollar system, this helped to create artificial demand both for US dollars and for US Treasuries that they're denominated in. This was good for the US in the short term, as it enabled the US to keep spending on war and welfare and government bloat like a drunken sailor for the past few decades. Number two, the trade surplus recycling began to break down after the great financial crisis in 2008-2009, when China realized that the US money printers, Bernanke at the Fed, were going to print forever, thus making US Treasuries a really bad long-term investment. As a result, China began to buy physical assets like gold mines and ports and airports, etc., instead of US Treasuries. And then number two has been breaking down in the past few years as countries like Russia or Saudi Arabia sell crude oil directly to China, for example, bypassing the US dollar. And even India has been doing this lately. They purchased some oil from the UAE using rupees a couple months ago. So here's the big problem. The US needs big dummies to buy its toxic sludge debt. This toxic sludge debt, government debt, US Treasuries, are guaranteed to lose purchasing power over time because of the way they're priced. Their yields are much below the inflation rate. So if you hold them for any length of time, you're guaranteed to lose purchasing power. So here's the problem for the US government, and for the US Treasury in particular. You need some really big trillionaire dummies that have large balance sheets that can take down this US government debt. Since there's $35 trillion worth of it, that's a larger number than US GDP. So it's an extremely large number. And if the US government can't get someone to buy this sludge, then the Fed has to buy it instead. They have to print money, buy the US Treasuries for themselves, which is highly inflationary, which makes US Treasuries an even worse investment for everyone. So these are various ways to create artificial demand for US dollars and US debt. We have petrodollar recycling, we have trade surplus recycling, and today we're going to talk about a new Bitcoin dollar system. This research has been pioneered by Mark Goodwin. You can buy his book online. I've not read his book, but I've listened to a lot of podcasts and interviews with him, and that's what this will be based on. You should also check out his interview with Preston Pysh from a few days ago, and I'll link to both of these in the description notes below. And Mark, if I'm making any mistakes here, please feel free to correct me on Twitter or in the comments or DM me. Now, just as the US dollar was not backed, redeemable for crude oil under the petrodollar system, it wasn't a strictly backed system like it was under gold. Under the Bitcoin dollar system, the US dollar will not be strictly backed by Bitcoin, not redeemable for Bitcoin. Instead, the Bitcoin dollar system will be used, like the petrodollar system, to create artificial demand for US dollars and for US Treasuries. And here's some different ways of doing that Mark and Whitney talk about. Number one, the most liquid trading pair in the world is Bitcoin versus the US dollar rather than versus any other fiat currency, with the implication that you usually need to buy US dollars or US dollar stablecoins like USDT, which we'll be talking about more later. First, you need to buy these dollars in order to buy Bitcoin on an exchange, especially if you want to buy a lot of it. You're not going to be able to use your Turkish lira to buy a lot of Bitcoin. You're going to need to get your hands on some dollars because that's where the really big liquidity pools are. This is very similar to needing to acquire US dollars before you could purchase crude oil from OPEC under the petrodollar system. So this creates demand for US dollars as a medium of exchange to buy Bitcoin with. Number two example of a Bitcoin dollar system, create financial regulations that force custodians that hold Bitcoin for someone else, in other words, a Bitcoin liability on their balance sheets, to keep a proportionate amount of US dollars on their balance sheets as a counterweight or as a backing on the asset side of the balance sheet. And so what this means is as the fiat value of Bitcoin rises, this will force companies to accumulate more and more US dollars or US Treasuries to hold against that Bitcoin liability, again, creating artificial demand for US dollars here. Number three, another part of the Bitcoin dollar system, you allow stablecoin issuers, which we spoke about yesterday, like Tether, to continue to expand market share. The bigger Tether gets, the more US Treasuries it needs to buy in order to back its US dollar stablecoin, which is called USDT. Voila, you have just created three new sources of demand for US dollars and US Treasuries, and you're thus helping to perpetuate US dollar hegemony, all the while pretending that you're quote-unquote pro-Bitcoin. If you're enjoying this video so far, I just ask you to help to support the channel. Click the subscribe button, leave a like, leave a comment, share this video with a friend or family member. Also, you can leave a super thanks or a tip, or you can join the channel for $2.99 a month or $4.99 per month. And this really helps me with the YouTube algorithm because YouTube does get a percentage of those profits, and it helps to spread my videos to a wider audience on YouTube. So we talked about this yesterday, how the US government is partially funded now by Tether. Tether, as of the most recent attestation, owns about $91 billion worth of US Treasuries. And this is an enormous amount, especially when you put into perspective that Tether now holds more US Treasuries, or about the same amount of US Treasuries, as Germany, which is our major European ally. So Tether's been growing extremely rapidly, as we spoke about yesterday. So now let's make it even more evil. Under the guise of quote-unquote protecting consumers, let's get our local Bitcoin and crypto-friendly U.S. senators to float a bill that makes it impossible to issue U.S. dollar stablecoins that do not buy U.S. Treasuries to back them. And this is exactly what the Gillibrand and Lummis bill has. If you do a search for algorithmic coins, algorithmic payment stablecoins, it shall be unlawful for any person to engage in the business of issuing, creating, or originating an algorithmic payment stablecoin. What does this mean? This means that if this bill were to become law, or some version of it, for example, under a Trump administration, and if you wanted to issue a US dollar stablecoin in the US, you would not be able to do it in some synthetic way using DLCs or long spot Bitcoin, short Bitcoin futures. There are many different ways of creating synthetic dollars using Bitcoin, where you basically have some spot Bitcoin in a lightning channel or on chain, and then you hedge it, you hedge out the exchange rate risk. And if this were to become law, if this Gillibrand and Lummis bill were to become law, you would not be able to create algorithmic stablecoins in the US. Instead, you'd have to go out there and create a US dollar stablecoin that's backed by actual US Treasuries. And again, this would create artificial demand for this toxic sludge. Now, thanks to the Terra Luna blowup, Terra was a poorly constructed algorithmic stablecoin. These senators, Gillibrand and Lummis, can use fear to push through legislation that's really good for the US dollar and really good for Tether in particular, since it's a centralized US Treasury-backed US dollar stablecoin, as we spoke about yesterday, not an algorithmic stablecoin. And Tether has already positioned itself as the US government compliance coin, carrying out OFAC instructions, also onboarding the US Secret Service and the FBI, and basically cooperating with the US government to any extent that it can. We can see here in this tweet from Senator Lummis talking about a strategic Bitcoin reserve that her main goal here would be to secure the US dollar's position as the world's reserve currency into the 21st century. So when you hear her talk, she appears to be pro-Bitcoin and has done some good things for the space. But why this emphasis on preserving the US dollar as a world reserve currency? That's not anything that any real Bitcoiner I know is interested in. So what are the pros of a Bitcoin dollar system if Mark Goodwin is right about this? One pro under a Bitcoin dollar system, the US dollar price of Bitcoin will rapidly go into the many, many millions of dollars per coin. We have Michael Saylor naming a base case for Bitcoin at the Bitcoin conference, base price target of something like $17 million. His low target was like $3 million, high target was like $45 million, and the base case was $17 million per coin by 2045. Now, I think Bitcoin's going to go up a lot regardless, but this is one pro of a Bitcoin dollar system, that basically you'll be having the US government pumping Bitcoin in order to keep itself solvent and in order to create demand for US dollars on its balance sheet, as we spoke about. What are the cons? The higher the Bitcoin goes, the more funding the US government receives, and the greater US dollar hegemony becomes. Now, why is this a bad thing? I shouldn't have to spell it out, but I'm going to spell it out anyway. It's a bad thing because the US federal government is just too big. It's the global bully that's used domestically and by foreign actors. It's that everyone tries to hijack it in order to accomplish their own goals or line their pockets. The US government and its intelligence agencies have their dirty fingers in everything. Endless foreign wars that don't make Americans safer, corrupt science. Most of the science funding in the U.S. comes from the U.S. government, and it's really perverted incentives and creates some really bad research surrounding climate change, nutrition, vaccines, things like this, and just the endless propaganda, endless disinformation that we have to live with both offline and online endlessly, just because the U.S. government, the federal government, is simply too big. And if you support Tether and USDT, you are actively helping to support their surveillance state and US dollar hegemony at many different levels, as we saw in yesterday's video and as we're seeing in today's video. I'll end with something really scary. This is Howard Lutnick, and he is the CEO over at Cantor Fitzgerald. He spoke at the Bitcoin conference. He really, really likes Tether because his company, Cantor Fitzgerald, is a major custodian for Tether's US Treasuries. I'll link to this video in the description notes below, and you can watch it. As Mark Goodwin points out, Tether has been investing in spy satellites, which is a little strange for a financial services company, but they've invested in this company called Satellogic, which builds spy satellites for various governments. And if you take a look at who's on the board of directors, according to Mark, we can see Howard Lutnick here. And we can see our old friend Steve Mnuchin from the previous Trump administration. He was the Treasury Secretary. And so you have to wonder, what are these people really up to? Are they more interested in the US dollar and funding the US surveillance state, or are they interested in Bitcoin? Is this what a Bitcoin Trump administration is going to look like? Lots of tech surveillance with an emphasis on financial regulation, like Lummis's, that will help to preserve US dollar hegemony rather than extend Bitcoin adoption. Is Senator Lummis in on the game as well with her stablecoin legislation that bans algorithmic stablecoins and helps to expand Tether's business? And the bigger Tether gets, the more it can invest in creepy projects like spy satellites. Are we witnessing the birth of the new petrodollar system before our eyes, the Bitcoin dollar system? I got a couple of questions in my previous videos that I wanted to share my answers here. We have Neon RQ6ND asking, aren't you a Bitcoin maxi? Why do you care about stablecoins when they aren't even available on the Bitcoin chain? My answer, because I like to separate money and state, and part of doing that is helping to defund and shrink the U.S. government. I'm not talking about taking away all of its funding, but I think its funding should be shrunk because it's just too big. It spends too much money. It has too much influence. U.S. dollar stablecoins help to prop up the current regime, which is why I'm going after Tether in my latest videos. Then we have another question from Leo Messi, 1982. Would really like you to answer me this, Matt. If you truly believe that the U.S. is the biggest terrorist organization, how on earth you still live there? Do you feel at ease when helping to sustain such a terrorist organization with your taxes? I, for one, couldn't live in Syria, Cuba, or Russia, to name a few actual terrorist-run countries. The U.S. is not perfect, but it's far from being what you make of it. And here's my answer. Why do I choose to live in the U.S.? It's because it's where I was born. It's where I've lived my entire life. It's my country. I'm an American who loves the American people. I love the land here. I love our history and the Constitution. The federal government in its current form has become an enemy of ordinary Americans, but we still have our guns. We still have our free speech. We still have our Constitution. These are things that a lot of countries, most countries, don't have. And lots of Americans, we also have lots of Americans who are kind of crazy and intrinsically rebellious and unwilling to be governed. You don't really see that in Asia. You don't really see that in Europe either. In the US, we also have a system of states' rights that gives me hope, just as Bitcoin gives me hope. You have to distinguish, and this is very important. A lot of Republicans, for example, have trouble understanding this. They hear someone like me criticizing the US government and they assume that I'm a leftist, which I'm not. But you have to distinguish between the US federal government and everything else. And when your government's corrupt, it's not unpatriotic to criticize them. In fact, that's what you should do. The U.S. federal government is like a giant parasite that has attached itself to America, and I would like to see it defunded to some extent, maybe shrink it by 90%. And so I don't want to see a Bitcoin dollar system rise up that helps to preserve U.S. dollar hegemony and that helps to continue to fund the U.S. government. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.